Hello, everybody. This is Nina Olson, the Executive Director for the Center for Taxpayer Rights, and we are back with another of our tax chats in our series on transforming tax administration. And with this tax chat, this is our fifth in the series, we are actually moving to a topic out of sort of what I've been calling the foundational aspects of tax administration, the budget, IT, the workforce, and into more substantive areas. And we're starting with really something that's pretty substantive, which is compliance. What are ways to maintain, and increase voluntary compliance, other forms of compliance with the laws, the tax laws? And we have a really great group of folks today with us, and I'll introduce them in a second. I want to note that we ask everybody to put themselves on mute and take themselves off camera if they're not speaking. And the other thing that you can do is put your comments and your questions in the chat. And we'll be watching the chat throughout. And if we have time at the end of our conversation, and we'll incorporate your questions as we talk along. And if we have time at the end, we'll ask people if they have some questions that they want to raise themselves. So the folks that we have on the chat today are, we're going to start with Erich Kirchler. And Erich is a professor. Are you emeritus yet now? Or are you still a professor? Professor Emeritus at University of Vienna in Vienna, and he's a psychologist. We have Jim Alm, who is a Professor Emeritus from Tulane, and he is an economist. We have Stephen Daly from King's College London, and he is a lawyer and does legal theory, really. And we have Mandi Matlock, who's a lawyer with Texas Rio Grande Legal Aid, and she's in Austin, Texas, and she runs the low-income taxpayer clinic there. So we have a really good, diverse group of disciplines and experience. And I'm going to start with Erich to talk about some of the work that he's done, exploring sort of the reasons why people comply and how the agency should approach compliance. So Erich, do you want me to go to the slide now, or do you want to talk for a bit, or what?
Well, perhaps I'll start talking a little bit. And Nina, I retired October 1st, 2020, actually, but the day after I was back at the university. So I don't know how you would call that.
Yeah.
Nina, thank you very much for the invitation, and hello to everybody. Decades ago, I had the opportunity to train auditors in the Austrian tax administration. And at that time, besides talking about communication, bargaining, etc., I had the impression that they had all this this mindset of, being hunters who catch the thief. And when they were bargaining and playing roles of taxpayers and auditors, etc., I had the impression it's all about interaction. It's all about social interaction, actually. However, at that time, I never thought that I would become interested in tax behavior and become a tax psychologist. That started much later, when I had the opportunity to, take half a year to read economic, psychological papers about tax behavior. At that time, I thought, it's all about audits and fines. Taxpayers are considered to be irrational decision makers. Then in a situation of uncertainty, they think about whether it pays to cheat or not to cheat. And if probabilities of being audited, if audits are effective, and if fines are harsh, then it doesn't pay to cheat, and they will be honest. From a psychological perspective, at that time, it was mainly about attitudes. So the perception of citizens of various institutions, among the different institutions, also the government, and of course the tax administration. But very early psychologists started also talking about justice. the perceived distributive justice, procedural justice, and to a lesser extent also retributive justice. Now, when reading psychological and economic approaches, I had the feeling, well, it's probably both psychology and economics which play a role, and we need to combine the insights from these different disciplines. And I had the feeling that actually audits and fines represent something like the power of the authorities. If audits are frequent and efficient, and if fines are really considered to be fines, then power of the authority is quite high. And from a psychological perspective, it was not only attitudes and justice perception, but also, well, knowledge about the tax law. So literacy was an important aspect, which was treated in the literature. And of course, the social aspect, the opinion of the people around me. If they consider paying taxes the right thing to do, then it becomes a guiding rule also for myself. And perhaps in a somewhat rough way, all these psychological insights were summarized as trust in the authority and trustworthiness of the authority. And so actually, I came up with two dimensions which shape the interaction climate between the tax officials and taxpayers, namely power and trust. And for a long time, we were considering trust as the dimension which leads towards voluntary compliance, whereas power would mean kind of well, enforcing people to do the right thing. But many studies which we conducted here in Vienna, not only here, also UNINA gave us the opportunity to conduct studies in the US. From all these insights, I think that the interplay between power of the institution, of the authorities, and trust in the institution, the interplay between these two dimensions is a quite complex one, much more complex than we initially thought. Because the initial thought and the initial empirical tests which we conducted were just focusing on our expectation that the higher power, the higher the power, the lower trust would be, and vice versa. That was not true. What we found out was that first of all, we have to distinguish between two facets or phases of power. It's kind of, yeah, power as something which is legitimate, professional expertise, versus the hard power, which we consider especially coercive power. So these are two really different aspects of power. And the idea was then that legitimate and professional power would correlate positively with trust, which indeed is the case, whereas coercive power is negatively correlated, which is not always the case, however. That's more, let's say, we had to look closer at what coercive power does and when it is reducing trust and voluntary compliance, and under what circumstances coercive power could even strengthen trust and lead to increasing voluntary compliance. And the most recent outcome of all these endeavors to understand the dynamics between power and trust. But first of all, I would like to say that indeed trust is the basis for all voluntary cooperation. And I think this holds not only for the tax institutions and taxpayers, but it's true for all the institutions in the nation state and citizens' willingness to cooperate, to accept rules or not to accept them. So trust indeed is essential. And we conducted studies in different countries, actually 44 countries, where people told us that they would cooperate with the institutions, the tax institution especially, if they could trust them. In those countries where trust in the institutions is quite high, people said the institutions, the officials should wield more power. In that case, citizens would cooperate or be more willing to cooperate. So trust and positively correlated with that legitimate and professional power are on the base of all. After that, we can work with coercive power. And the question was, when does coercive power, when does it lead to even higher trust? And what we think is that coercive power, if well targeted towards free riders, if it's really well targeted, meaning if you have a good risk management, you know whom to address, and you are really severe with those who try to exploit the system, in that case, a reason-based trust seems to increase, and legitimate power is also perceived. Legitimate power is also increasing. And when we conducted our studies on emotions which are involved with in interactions with the tax administration, with tax auditors, etc., we found out that the feeling of protection, of security, is a dominant emotion when it comes to interactions with tax officials. Now, if coercive power is well targeted, this would also often elicit a feeling of protection in those groups, in the majority actually, which is willing to cooperate. They feel to be protected. They feel the system is a stable one and are more willing to voluntarily cooperate or comply. On the other hand, if coercive power is more or less random, it seems that trust and the perception of legitimization of authorities is decreasing. And we observe feelings like fear, anger, but also attention and prudence. So on the one hand, coercive power, if not targeted, rather than educating people to be compliant, stimulates something like strategic reasoning, thinking about when and when you cannot exploit the system, when it pays and when it does not. And the most dominant feeling on the negative side is anger. And we know anger is not leading to voluntary compliance, but it enforces tendencies for aggressive avoidance and, well, if it pays, to evasion. Okay, now we have the slide which more or less summarizes these ideas. And you see here, I started with legitimate and power and professional power and trust, which are, so to say, were always the positive aspects correlated with voluntary compliance. And then with regard to coercive power, I think that we come closer to understand under what circumstances audits, harsh fines are really having the positive effect which you expect, and under what circumstances it's leading to strategic thinking, and probably to what colleagues in the University of Trento, Italy, observed, to something like bomb crater effects, avoidance tendencies. Now, you see, it was actually a long way from the initial assumption that audits and fines work, and that's it, to the addition of trust and or what is, so to say, packed into this dimension, up to the study of emotions and the separation, distinction between what leads and from what situational aspects it leads to voluntary cooperation and enforced cooperation.
Okay, so, all right, well, shall we go? Mandi, you want to go off? This is great, and thank you for saving the day. Jim, do you want to pick up on that conversation? Because I know some of the work that you've done on is in this area.
Thank you, Nina, and thanks, Erich, for that, as always, wonderful presentation. Let me pick up on some aspects of what Erich went into. And I think it starts with the recognition that the major issue, maybe the major issue, but it's certainly a major issue in tax administration, has always been securing taxpayer information. Now, there's always also been an information asymmetry between taxpayers and the tax administration. That's probably the single biggest catalyst that drives non-compliance, tax non-compliance. Technological changes have affected that information asymmetry, I think, in the last well, years, decades, and certainly most in the most recent years. And in particular, there's recognition that the combination of third-party information combined with employer tax withholding is a very powerful tool for improving compliance. It has some downsides that I can talk about, and some of my own research has demonstrated. But nonetheless, the evidence is that income that is subject to extensive third-party information is people comply on it, largely because they recognize that if they don't, the tax authorities have information that can verify that they are underreporting. And so the question then becomes, in some sense, how can the IRS improve the information that it gets, as well as how can it improve the way in which it uses that information? In part of the answers to these questions are in technology, the better computer systems that would allow better analysis of the information that it gets. And that's actually, that'll no doubt be part of our discussion later on. But one part of this also is that the IRS may be able to get better information and more useful information by the way in which it asks questions on tax returns. A strategic use of questions, in other words, that strategic use that's based upon modern social science research that demonstrates in particular that certain types of questions are more likely to lead people to respond honestly. The current 1040 in the United States uses questions that doesn't use questions, actually, that allows individuals to underreport their income by essentially claiming that they forgot the types of income. These refer to acts of omission. People would simply omit to report certain types of income, for example, and they might claim that they forgot about it. Why not utilize, based upon social science research, based upon nudge research, that require people to commit acts of commission in order to underreport, in order to cheat in their taxes? So why not ask a series of questions in trouble areas, areas that are well known to the IRS and as areas that are high non-compliance areas, that require individuals to participate, to engage in an act of commission in order to cheat. So, for example, what are some of these trouble areas? Well, the trouble areas that are of non-compliance, there are a variety of trouble areas, but some of the more obvious ones are unreported cash income, use of digital assets like cryptocurrencies and such, paying household employees and inappropriately claiming credits, and the use of foreign accounts, the use of tax shelters. So why not ask on the 1040 questions that require people to commit an act of commission in order to cheat on their taxes? So, for example, on unreported cash, a question might be, in 2022, or change the year to whatever year you want, the stock income reported on Form W-2 form 1099, did you receive any business-related cash or cash equivalent payments? Yes or no? And if you answered yes, how much did you receive? And furthermore, how much of these payments did you deposit in financial institutions or hold in digital assets? People can no longer simply say, I forgot, because they are asked explicitly about this issue. Another one, tax shelters. In 2022, aside from transactions in publicly held stock and securities, did any investments you made or business venture you engage in yield recognized losses exceeding $500,000? Yes or no? Yes or no? And if you answered yes, what was the aggregate amount of such losses? So it's possible, and this is, I will acknowledge that this is a work, joint work with Jay Soled of Rutgers and Kathleen Delaney Thomas of University of North Carolina, both lawyers, that there are other types of questions that could be asked. Now, a natural, when Jay and Kathleen and I were first discussing this use of nudge types questions, acts of commission versus acts of omission, I was, as maybe some of you are listening to this, somewhat skeptical and thinking that these types of questions are not going to work in the absence of some obvious sources of verification. And I will grant that verifying this type of yes/no answers would improve their effectiveness. However, there is a good bit of social science research that indicates that people are far more reluctant to engage in acts of commission than acts of omission, for a variety of psychological reasons that Erich understands and has written about, understands much more than I do and has written about extensively in his own research. And in fact, there are some historical examples from IRS practices as well as practices in other countries like the United Kingdom or the Dominican Republic that demonstrates the effectiveness of these types of questions to encourage more honesty. Classic example in the United States is in the 1986 Tax Reform Act, an IRS researcher suggested that he was skeptical of the many child exemptions that were claimed on tax returns. And so he suggested to his superiors, let's ask a question that requires people, if they want to claim that exemption, to report the Social Security number of their children. And between 1986 and 1987, or 85 and 86, when this requirement went into effect, the number of children in the United States died by 7 million. Now, obviously, kids didn't really die, but what happened is that 7 million children who were claimed as exemptions in the year before this went into effect disappeared. And so in popular media, it was described as they all died. But it encouraged people to be honest. A similar example several years later was on people claiming childcare expenses. A similar question required them to report the employer identification number of their child care providers, and the number of child care providers, the number of people claiming child care expenses went down significantly. Similarly, in the United Kingdom, now in both these cases, there was, I think, at least the implicit threat that there would be these acts of commission could be verified. But there are also explicit examples from the United Kingdom and the Dominican Republic of controlled field experiments in which people received letters that explicitly said, previously you may not have responded and may not have responded honestly, and that was, we have treated that previously as an act of omission. Going forward, we will now treat this as a deliberate act of commission by you, and you will be subject to potential penalties. And the degree to which that change in wording in letters sent to people encouraged more honesty was really quite striking. So there are, I think, clear examples that this type of strategy can potentially work. Now, it will work not on everybody, but it will work on some individuals who are sensitive to this type of framing issue. And the result of this is that with at relatively little cost, this can encourage compliance. This can encourage more voluntary compliance. It will also provide better information. Go back to my original starter. It provides better information, more complete information to the IRS that will put them in a stronger position in case they actually do audit these people and find some examples of dishonesty and underreporting. And clearly, it's going to be generating more revenues. Now, I've had this conversation with tax people, tax authorities in the United States. The GAO is quite interested in this. The IRS, in fact, has started asking some of these questions on digital assets that show up on the 1040 and questions on foreign accounts that also shows up. And I'm not sure the impact of this has been examined systematically. Could be a potential area of research on the part of researchers within the IRS and research outside the IRS. But other countries are quite interested in this as well. I presented this to people recently in the Australian Taxation Authority, and they would like to see some stronger evidence of the power of questions that require acts of commission to improve compliance. But that's also an area of research that I'm talking about with some research, and I'm hoping that for example, Erich and some of his colleagues, some of his posse of researchers at the University of Austria would be interested in it. And I'm hoping that Nina might be interested in that as well. So this is all a way of improving compliance with, I think, a relatively low cost approach. It's not going to be a panacea, but it can nudge people who are amenable to these kinds of nudges to improve compliance, can generate more revenues, and provide better information to the IRS.
So, Jim, this is really great stuff. And it reminded me of in 2003, I think it was, as we identified as one of the most serious problems when I was the National Taxpayer Advocate, we identified the cash economy as a most serious problem for taxpayers. And we made legislative recommendations about that could maybe minimize some of that. And some of that had to do with more information reporting. But one of the administrative recommendations we made to the IRS was you go to two sources of how cash would be underreported or not visible to the IRS. And one was people not filing 1099 forms, information forms on folks that were providing you services in the course of their business. And for that, we asked them back in 2003, we said, why don't you put on the form, on any business form, the question, did you make any payments, to subcontractors? I'm not wording it properly, but that would require 1099 reporting. And then if you answer yes, then it's, well, did you file the 1099s? So that you would have to go yes or no. And that would again change it from an act of omission to commission. And then that was to get to surface some of, you already had the legislative authority, but it was the reporting requirement, but people weren't doing it, particularly in certain businesses like construction and things like that. And so the second component was going to the sole proprietors themselves and breaking out the reporting of gross receipts on the self-employment schedule to say gross receipts from 1099s, because, I was a return preparer for years, and I could tell you that my clients would come in who were sole proprietors, and I'd say, okay, show me, what you've got, and give me your 1099s and what's your total income. And they'd pull in their 1099s and maybe add another $1,000 to it, as cash. And it was really, so, I thought, well, let's smoke this out. And so ask them, what's your 1099 income, but then have a separate line, gross receipts from other sources, including cash. And so that would maybe make them a little nervous of just putting $1,000 on that line, and maybe you'd get $2,000, but that was $1,000 more than what you were getting before by just making that visible. The IRS has never adopted our second proposal. I don't know why. The first proposal they have put on the Schedule C, at least, not on every single business form that I could see, but at least they've made some effort on the Schedule C to ask the question about, do you have a 1099 reporting obligation, and did you file the 1099s? But that took probably about 15 years to get them to do that.
As always, you were years ahead of.
Well, I don't know about that, but when you were doing that, it was coming from my experience, filing returns for these taxpayers, and how, in my highly unscientific sample of my client base, the behavior that I could see there,
Well, clearly this is subject to field experiments that in which these some sample of individuals get this type of information and others don't. Now, if the IRS may not be amenable to something like that, but it would be subject, given that you would be treating taxpayers differently. But it's also subject to research in the laboratory, for example, that I think would demonstrate the efficacy of these types of questions.
Melanie asked a really great question, which is any differences in reaction to such questions among income brackets, for example, very low income, marginal self-employment versus super rich. And I think that would be a very interesting thing to do, even on the question that the IRS has put in on its forms now about digital currency. That would be really interesting to look at, just, some gross data, looking at, what the breakdown is. The only other example I have is on the Schedule B are the questions about, did you have more than X amount in a foreign account? And if so, did you file basically the FBAR form, the appropriate form to report this to Treasury? And, for years, nobody ever looked at that form, and the software itself, the default for most accounting tax preparation software was to answer no to both of those questions. Since taxpayers never really paid attention to that, they often got incorrect answers. When the IRS started looking at offshore accounts and getting data through information exchange agreements and things, what we saw in my office was, relatively low income, modest income taxpayers absolutely terrified of what was going to happen to them, and coming forward and paying what I thought were exorbitant penalties. But and I've always felt like going back and tracking that data through a decade and a half of how that form is now handled would be really interesting. And you could do it with income.
Well, let me make two other points. One is I think there's information in the IRS that would allow one to examine that issue right now, and hopefully with the solicitation of research proposals that the IRS is putting out, someone will want to look at that. Perhaps some people listening here. The other point I would make is that the IRS, that's related, gets massive amount of information through various types of information returns, information that it does not utilize now. And that's part of what presumably the $80 billion that the IRS is supposed to be getting over the next 10 years is partly what's meant to address. Of the information returns, the most recent study from the GAO was that the IRS annually gets about 3.5 billion information returns, of which about 2/3 of them are various 1099-Bs on proceeds from broker and barter exchange transactions. But there's lots of other ones. There's another billion plus returns that the IRS gets that it does not utilize, in part because computer systems don't allow them to match the information from those information returns with specific tax return items, in part because it's simply overwhelmed by the number of these returns. And so there is these questions that could be asked, I think, would better allow the IRS to match some of these information returns with tax returns. But it does require, I think, better IRS use of updated technology and improved technology and more advanced technology to allow them to actually examine some of these 3.5 billion information returns that are, of which they currently analyze about, I think 1 out of 8, something like that, mainly the W-2s, for example.
Yeah, mostly, and we're going to have in June, in the first week of June, we're actually going to have Jay McTeague, who was the lead on that GAO report, and we're going to talk about data and the use of data in the IRS and what holds it back and what could be done. But I do want to say that when Commissioner Rosati came and Larry Summers and Natasha Serin came out with their proposal about getting bank receipts and expenditure reporting on, large accounts over 400, for taxpayers who have income over 400,000, one of their whole points was you're not supposed to it's not about matching. That's so low bar on that. What you're trying to get is information that will allow you, with more sophisticated software and analysis, to identify patterns and flows and relationships and really direct you to where you should be putting your attention of your audits. And it might also help you say, we're not worried about these people, this group we're not worried about. They're by and large mostly compliant, which goes to Erich's point about the negative effects, which we'll talk about later, if you audit and you assess something to somebody, or you put them through an audit and there's no change once you're in there. I want to turn to Stephen now. You've been listening patiently, so you want to add your thoughts to this process?
Yeah. Thanks so much. So that's really fascinating what Jim and Erich have said so far. Just to pick up on Jim's paper that he kindly shared with us before, and also the comments that he just made now. So nudging, serious investment went into nudging in the UK in post 2010. We even had a behavioral insights unit, which was colloquially known as the nudge unit, which was part of government. And they didn't just work with the tax authority, they worked with lots of government departments. But importantly, they did this great study of taxpayers. They sent out these nudge letters and they saw what happened. So the nudge letters were sent out to particular taxpayers who'd filed on time but hadn't paid the tax that was due. So to remind these people to pay their taxes. And it was 200,000 people were surveyed, some in the control and then some in the uncontrolled. And they found that the payments increased by £9 million, which is very big in the context of UK revenue. And what they'd done with the nudge letter, the specific nudge letter that worked the best, was they took away instructive terms like "you ought to do this" and put in descriptive terms. So the most effective sentence that went into those letters was the following: 9 out of 10 people with a debt like yours in your area pay their tax on time. You are in the minority. So it's just very, very interesting. And I think there's plenty of scope. There's plenty of work that can be done on this. And in terms of low-hanging fruit that tax authorities could pluck, I think nudges are very, very effective, essentially. Nudges are a great tool for tax authorities if they just want to increase compliance, so long as the nudges are calibrated effectively. So that's what I want to say about nudges themselves. Moving on to what my research is about. I'm a lawyer, I'm a legal scholar, and so I come at things from a legal perspective. Within that, under that guise though, nudging is very helpful from the tax authority's perspective, in that you don't have to get legislative approval to do anything. You could just start. You could test out how it works, sending these letters, and see if it is useful or not. So it's a nice tool from that perspective for the tax authorities also. But the greatest strand of my research concerns law and tax administration. What are the powers of tax authorities? What are the legitimate limits that are placed upon those powers? And what are the corresponding rights that taxpayers have? The book that I wrote, arising out of my PhD in 2020, for which Nina Olson very helpfully provided a lovely foreword at the beginning, it discussed the rule of law and what the rule of law requires of tax authorities in the specific context of advice. The logic went as follows. The rule of law is a very important legal principle. There's broadly two components. One is that government authority is derived from law, and the second component is that law should have certain qualities so that their functions can be performed. One of those qualities is that laws should be capable of guiding action, what I call the guidance principle. So what does that mean? People ought to be aware of their legal rights and obligations in advance of any action that they take. How does this relate back to tax? Well, with tax authorities, whenever they interact with taxpayers, they ought to do so in light of the rule of law. Tax authorities could do nothing. They could be completely passive and standoffish from taxpayers, receive tax returns and then audit them. Or tax authorities can be proactive. And in my book, I argued that tax authorities ought to be proactive. They ought to provide assistance to taxpayers. Why? Because such assistance enables taxpayers to better understand their rights and obligations. That assistance, though, it's not just purely there's not just purely a legal benefit. There's also an obvious compliance benefit. And so it touches upon the same things that Erich and Jim had already talked about, but not from a psychology perspective or from an economics perspective, but rather from a legal perspective. So I propose in my book that tax authorities ought to provide advice and guidance and rulings and help to taxpayers. And when they do so, they should have 5 things in mind: correctness, clarity, accessibility, scrutiny, and reliability. In the book, I go through a series of recommendations that should be adopted by tax authorities so that their advice does better align with those indicia of clarity, correctness, accessibility, scrutiny, and reliability. I also propose, though, even if you're not going to make those changes, perhaps there could be something more radical in the form of broader provision of rulings like Australia has. So in Australia, individuals can apply to the tax authority for binding rulings on a whole series of arrangements and transactions. Australia also has a model of public rulings, which means that when the tax authority issues certain advice to the general public, that advice is binding. Why do I think binding is useful? Well, it's no good to me for tax authorities to issue advice and to issue guidance to taxpayers if that guidance itself is not binding on the tax authorities. What is the point? It loses all of its weight. Its ability to guide action is lost as soon as that occurs. That's everything that I wanted to say, Nina, on what I've been brought up so far.
I think that's really wonderful. And I wanted to say also that Michael Halsworth, who's with the Behavioral Insights team that has sort of gone global now, and he's in New York, he's going to join us for a later chat later on in June too. So we'll hear more about the nudging letters. And I just have a memory of visiting him in UK, and they had just tried the nudging letter in Wales. You know, they'd done it throughout, you know, England, but they'd done it in Wales and it didn't work in Wales. And I kept saying, well, why didn't it? You know, what is it about the Welsh that the nudges didn't work? And he didn't have an answer to that. And I thought that would be a really fascinating follow-up study.
Nina, can I make a remark on that?
Yes, absolutely.
I really think that the nudging studies are fascinating. It's really, also from a theoretical perspective, great stuff. However, we have to really apply differential approaches, I think, because there are so many nudging studies now already published, 70, 80 and more. We had an opportunity to make a kind of review of 60 studies, of those studies, and had the opinion that first of all, nudging letters or the letter from the administration goes to those who did not yet comply. So the population is a really segmented one. It's not a random or representative population. It's probably those who, in terms of Valerie Braithwaite, have motivational postures which are not like commitment. So that's the first thing I think we have to keep in mind. And when we did this kind of review of these studies, we differentiated between non-compliant groups and different letters which they got. and mixed groups. We didn't have groups of people who were really compliant and got these letters, but was unsecure whether they complied or not. What we found was that deterrent letters or deterrence sentences were always working in the group of the non-compliant. So they really need deterrence. They respond only to deterrence and a little bit to simplification. Whereas in the mixed group, deterrence did not work. It was more the soft approaches, the psychological approaches. So, for example, pointing out that psychological costs, ethical values, or reciprocity. And there, I think that the Michael study, the Michael Health study was a really impressive one, a working one. But if it is possible to really differentiate between different segments in the population, then we might have even stronger effects and see what kind of nudges work when and for whom.
You know, the other thing that's really fascinating, and the other thing I wanted to raise was at one point the IRS did this letter study, again, sort of based on the traditional approach, which is identifying taxpayers who had not been paying. They were behind on paying taxes. They had a tax debt. And they tried different messages. One was the 9 out of 10. One was it's a social obligation. One was their traditional letter. And the other had a little American flag up in the upper right corner, kind of to go to your patriotism. And the one that just bottomed out and didn't, the others brought in some money, partly because the IRS was sending them a letter. But the one that really had no effect was the American flag, which I thought, well, I could have told you that given, you know, people's attitudes toward taxes in the United States. But I thought that was interesting to see that data.
Let me make one quick point as
Yeah.
well, and follow up on Erich's point, and that is that I think many people, and I've fallen into this myself, tend to think that one strategy is going to apply to everybody and apply equally to everybody, and that ain't the case. People are very, very different out there. There are some people who are motivated by self-interest, some people who will always do the right thing, some people who will are motivated by social norms, or some people probably who are affected by this American flag letter. And so what one really needs in this is an IRS strategy that focuses on this full house of behaviors, these very different types of behaviors. And so one strategy works on one segment of the population and may not work on another. And that's why the IRS needs multiple strategies.
Yeah, I like that. Yeah. So let's turn to Mandi, because Mandi's now going to show what the IRS is currently doing with one aspect of audits, which is the correspondence exam. And then and I think, Mandi, you can obviously talk about the population that you serve and their experience with this. And then I think we'll come back to Erich to talk about a research study that he did for the Taxpayer Advocate Service when I was the National Taxpayer Advocate, which was really looking at the responses and perceptions of taxpayers to different types of audits. So Mandi, do you want to share the correspondence exam process?
Sure. Before I do that, I just wanted to respond to Melanie's question because it raised a couple of issues for me, one pertinent to our discussion today and the other one maybe a little bit further afield. But Jim's research and his proposed questions seem really to go towards sniffing out unreported income, which is, I think, a problem of higher income taxpayers rather than lower income taxpayers. The IRS and scrutinizing lower income taxpayers' filings are focused intently on refundable credits, and to some extent that captures income and whether it's unreported on a Schedule C. But I think that the approaches that Jim is suggesting are really going to be key to sniffing out sort of the higher income non-reporting. The other thing that came up for me when Melanie raised her question was I think about the insertion of paid tax return preparers between the low-income taxpayer and the IRS. And there are questions that go to this acts of commission versus omission that have to be answered already for low-income taxpayer returns, such as, did this child live with you for all 12 months of the year? These are questions that I think, so long as the IRS does not have the ability to regulate what unenrolled tax return preparers are doing during the tax return preparation process, these are questions that never actually make it to the taxpayer. These questions are answered by the preparers and are frequently never posed to the low-income taxpayer. So that's a problem with this model, so long as the IRS has no input into how tax return preparation is taking place in that low-income taxpayer context. So in talking about what the IRS is doing with their current compliance efforts, we were discussing with Nina before the call that 85 to 90% of all individual exams are conducted by correspondence in the United States. And the correspondence exam process can be opaque, frustrating. Most people on this call understand that there's no one person assigned to examine the tax return. The examination is conducted entirely by correspondence. And of course, this implicates Erich's research, and I can't wait to hear what he has further to say about it after we take a look at some of the standard letters that the IRS is using in this process. The Internal Revenue Manual in Part 4 provides a fairly high-level overview of the automated correspondence exam processing procedures. And if you look at that, it lists about 70 correspondence exam project codes. And I just did a quick tally this morning. Of those 70, more than 50 of them touch on family status issues. That is dependents, refundable credits, filing status. And of these 50 or so project codes, the majority are built around the earned income tax credit claimants. So that tells us that, and we know this, those of us who are practicing in this area already know this, but for those of you on the call who may not know, that tells us that the correspondence exam process, which, as we said, captures 85 to 90% of all examinations of individuals, is focused primarily on low income and earned income credit claimers. So I wanted to share a sanitized audit notice. So what happens for a taxpayer when they receive an examination from the IRS? And I have so many screens open. Let's hope that this is, here we go. What you're seeing on the screen right now is a CP75. So this is the notice that the IRS sends to a low-income taxpayer to launch the correspondence examination. The notice shows the project code in the upper right-hand corner, so you can always look that up in the Internal Revenue Manual. This is the project code that is the most, I believe, the most common. It is relates to an earned income credit audit, and you'll see that the IRS requests information from the taxpayer. It says we need supporting documentation. What they do, though, with this, it makes no difference what the initial reason for the examination is. Once you're shunted into this process, the IRS asks you to prove everything on the tax return, everything. It asks for information, and when I say everything, I mean everything that could result in a refund to the taxpayer. So the earned income credit, the dependents, your filing status, the American Opportunity Credit. These notices are confusing from the outset because they request information about items which may not be claimed on the tax return. So they're not personalized to the taxpayer. This is a standard notice that goes out to everyone. It contains enclosures that are bewildering. Let's just take a look at the earned income, well, actually, let's look at the dependent. We'll content ourselves with this one. It's not quite as confusing as some of the others, but you can see that it takes the taxpayer through the, for example, the 3 tests to qualify for head of household filing status. And it has a series of charts with if, then, and, but. There are notated exceptions. There are long lists of documents that should be provided to substantiate the items claimed on the returns. Taxpayers, here's the one for the earned income credit. You can see how dense the text is and how difficult it is to move through. And also it's in English, let's not forget. And this notice will, there are 5 notices similar to this one that are enclosed in the CP75 letter to the taxpayer. So the impact on the taxpayer receiving a notice like this that requests scores and piles of documents that they may or may not be able to obtain, may or may not be able to read this form, cannot understand the form. There's no way for a taxpayer to ask questions about the form because no one has been assigned to their examination. They don't have a phone number they can call and speak with someone specifically who knows about their case. So they go through the examination like this. They have to respond to this notice and supply as much documentation as they can. There are a couple of intervening notices that happen where that may or may not contain information that's useful to the taxpayer to explain to them what they have provided is sufficient, not sufficient. Where does it fail to meet standards that the IRS is setting? What specifically do they need to do to correct any errors? I'm going to show you now in 886H. So This is the explanation of items. This is attached. This is going to be enclosed in each responsive letter that the IRS sends to the taxpayer. And it will say, it says it's an explanation of items, but let's see what the explanations say. It all goes down to whether you've been able to prove any of your dependents, because if you don't have dependents, then you can't usually take the child tax credit, and most often you can't take the earned income credit. The explanations for disallowing the child tax credit. Since one or more of your children have been disallowed, the amount of the credit has been adjusted. That doesn't provide any information to the taxpayer that is useful. Since you did not establish you were entitled to the earned income credit, we've disallowed it. I'm sorry, it's not funny. It's ridiculous. It basically says, since you didn't prove you win, you lose. And this is the information that's provided to taxpayers. The IRS has an opportunity in these notices to provide specific and detailed information that would help a taxpayer comply, but they don't use it. They have a pick list of non-explanations, which are dropped in on these forms and sent to the taxpayer. And this leaves taxpayers confused, bewildered. They don't know what they've done wrong. They don't know what to do next. It makes me see Erich's chart where he gets to the bottom and it says anger. And I think that is the experience of taxpayers who are dealing with these correspondence examinations. They don't have a method, a means. The IRS has so much room to improve if they're going to conduct these examinations by correspondence, which I think is wrong-headed in the first place, because this area of law is extraordinarily complex. And I can tell you that in my practice, I regularly encounter tax examiners and, yes, appeals officers who do not know the law in this area because it is complex. As soon as you have a family structure that's non-traditional or a combined family, or I recently had an appeals officer who didn't understand that the familial relationship of a stepchild is not severed by divorce. There are so many exceptions. The regulation for sections 151 and 152 is it is very complex. This is not an area that really lends itself to a correspondence exam model. But so these are the notices, and this is sort of the taxpayer experience. And I'm interested to hear, Erich, I know that you've seen these notices before, and I know you've done a study on it. Maybe you want to talk about what the taxpayer reaction is to this Orwellian experience of the correspondence examination process.
Mandi, before Erich chimes in, this also, what you're talking about, there's no education, there's no explanation. The other thing is there's no guidance. So to Stephen's point, these notices are an opportunity to provide real information to taxpayers so they know how to proceed going forward and not get into trouble again. And yet at the end of this audit, this is what people get. TASC, and I've talked about this study before, but TASC did this letter study that we sent out to a group of people that had not been audited, but had been select. They had flipped a switch in the system that the IRS uses to review refundable claims, particularly based on family status. And it's just a rule-based system. And we took the 3 most common rules and sent out letters to taxpayers that were signed by me. They were actual letters, dear taxpayer, specific name on it and on letterhead, and saying, the IRS has looked at your return and they did have some concerns. This is not an audit, but before you file your return, we want to let you know what the law is on this particular area that the IRS was looking at. And then we just, in very plain language, indented just in a paragraph, here's the language, here's what the rule is, that, so it was very salient to what they had done. And the other thing that we said was, you may still be getting benefits for this child, you might be getting food stamps, you might be getting welfare, you might be getting housing assistance, but the rules for that are different from the rules for getting a benefit on the tax system. So we wanted to flag that. And to your point about preparers, we said, if you use a preparer, you might want to show the preparer this letter, because we thought maybe that will be, make the preparer nervous. They know we're looking at them. And we were able to see, particularly in one category of taxpayers, one of the rules that was broken, we were really able to see a statistically significant increase in compliance the next filing season, and that was just for a price of stamp. But the point was, we were trying to educate the taxpayer. And after I left, TASC finished this survey, but we had sent them out in 2 years, right before the filing season, for 2 years in a row. And they published, I think it was in their 2019 or 2020 annual report. TASC completed the study looking at 3 years of returns after we'd sent the letters, so that you could see the longitudinal effect, and comparing the letter compliance to the non-touched population, the control population, all the people who had flipped broken rules, but the IRS didn't do anything about, and then the audited population. The letter had the longest and best compliance effect, that the audit had an effect that lessened over the years. And, my interpretation of that is, well, we explained something to them, as opposed to someone getting one of the letters you showed, which just tells them IRS is looking at you and might change your behavior in the next year because you don't want to, run across the IRS, but doesn't teach you anything. That was a long-winded way of saying there's no guidance in these letters. Erich, do you want to talk about the study that you did for TASC?
Thank you. I just wanted to say, I don't remember how often I hear that simplification is needed, guidance, education is needed. I very much believe it's true. I don't know why we don't reach a point of success. and it's incredible with its complexity, how many people make how many mistakes, errors, not only to their advantage, but also to their disadvantage. There are studies who estimate that approximately 50% of the errors are undeliberately made. So there's indeed need for education and guidance. And I assume that even when we use all the advantages of digitalization, we still need humans who provide answers to questions. But Nina, talking about the TAS studies, that was a great opportunity thanks to you. At that time, we were doing experiments together with Luigi Mittone, who discovered the bump crater effect, and not to forget the echo effect, which is quite interesting, especially when it comes to young entrepreneurs and how to guide them. Now, in the laboratory, we often found that people, after experiencing an audit, subsequently cheat, assuming that the probability of an additional audit would be quite low. And we wanted to test this hypothesis in the field. Now, thanks to you, Nina, we had the opportunity to use IRS data. I think we had about 2,200 Schedule C taxpayers who were audited, and were able to match them with so-called twins who were not audited, and to check what the difference is between those two groups in regarding their behavior following an audit. And in the first study which we ran, we found that on average, people after experiencing an audit in the first, second, and third year afterwards declare much higher income compared to those who were not audited. But again, when looking at differential effects, we found that only in the group who were audited and experienced a negative adjustment, who had to pay not only additional taxes, but also probably a fine, those people declared higher income in the future years. But in the group who was found having filed correctly, we observed this bomb crater effect. They declared less income. And we didn't know why, and wanted to conduct an additional study where we inserted a survey. So it was more psychological approach, a survey on the perceived audit probability, fines, the perceived justice, social norms, and all that stuff. And we were also looking at the outcome of different kinds of audits, correspondence audits, but also field and office audits, and separated the group into those who experienced an adjustment, who got a refund, or who were found doing everything correctly, so no adjustment at all. It was quite interesting first to see that in the group who experienced a correspondence audit, more than 60% told us that they did not have an audit. So they were not even aware that an audit happened. So I don't know what these people thought would be the reason for getting a message from the IRS, but probably they missed the justifications and argumentation. Now, when going further in the analysis, we try to detect clusters of groups on the basis of their attitudes, justice, perceptions, etc. And in both groups, the audited and not audited groups, we found a segment of people who had quite positive attitudes towards the IRS and taxes. There was another group with very negative attitudes, the angry group. That was the largest group, actually. The anger was the predominant emotion. And the third group, which was somewhere in between, not really negative, but more on the negative side, that was the more anxious, angry group. And we wanted to know what kind of audit and what kind of outcome would push people in what kind of cluster, in what kind of group. And it was, I think, astonishing to see that the cluster, that first of all, the cluster of audit with positive attitudes shrinked from the non-audit to the audited group considerably. And it shrinked especially when people experienced a correspondence audit. That was, I think it was, the group was shrinking by more than 6%, which is huge when you have samples like the ones we had with thousands of taxpayers. So correspondence as compared to Office of Field Audit had the most negative effect on at least the attitudes of people. And non-surprisingly, those who experienced an adjustment, a positive adjustment, had also negative experiences. What surprised us, though, was that also the group who got a refund reported more negative feelings. The most positive feelings were reported in the group which was found having correctly filed. So the question is, what does that all mean? And we added an additional study here in Austria and also collected data in Germany where we looked at the motions. And it was interesting to see, even if people imagine scenarios where they got announcement of being audited or were audited or had experienced an audit. Yeah? When they got this announcement and were at the same time told, imagine you have filed correctly, 100% honestly, even then, it's fear and anger which predominates. So the contact with the authority is something which is considered to be uncertain. There's a lot of risks. You don't know, even if you do the right thing, whether you go away without any punishment. So it's this insecurity in the interaction, which is I think, the most significant result in our studies. And all that is especially present in the correspondence group. And my opinion is that in this case, but Mandi, you correct me, please. In this case, people get the message. They don't have face-to-face contact. They don't have direct contact to get explanations. They don't know when and where they can get explanations. So it's a kind of a feeling of helplessness and finally resignation, frustration, which results.
No, you're absolutely correct. The examination process is bewildering for someone in a correspondence examination posture when they may try to call the IRS and speak with someone, but it won't be someone who's reviewed their documents, who's ever touched their case before, who's ever evaluated what maybe is missing or not missing from the substantiation needed to be successful.
I think that that sense of what you were talking about, both of you, that uncertainty, like lots of times businesses talk about, what we need is certainty. And yet people overlook the need for certainty and guidance for these lower income taxpayers. And I think there's this underlying assumption that these audits, well, the whole rationale for doing the correspondence exam was theoretically supposed to be a single issue, namely your family. But anybody that's done any work in the area of family knows that that's one of the most complex concepts around. And when you add, cultural layers to that and cultural concepts, it becomes very difficult. And then you have problems of proof, and particularly for low-income persons to engage, the concept of how you prove certain things when you may not be able to have the resources to get those documents, or you don't even understand that you're under an audit and you need to get them. It just is baffling and frustrating. And go ahead.
it's just impossible to convey these things in a written text that a low-income person who possibly has language barriers, educational barriers, can understand. And I have had cases where taxpayers have provided everything that the IRS asked for, but as we all in this context who are working with this population know, the letter from the school or the pastor or the neighbor or whoever has to reference the actual tax year under audit. And that's 2 years ago, sometimes 1 year ago, sometimes. They don't grasp that. You need to speak with them and explain. When I explain this to them, a light bulb goes on. Mm-hmm. And without that information, without that personal contact, without that explanation, opportunity to ask questions, clarifying questions, these taxpayers are left out in the cold.
You know,
I think,
go
sorry,
ahead.
Nina.
Yeah,
no, I
go
just
ahead.
want to say this: the uncertainty is also probably the greatest issue for big enterprises. If we look at the success of the OECD, or how is it called, the cooperative compliance program, the success is that they, the hugest enterprises in the country are involved in that. And they report it's not the issue of saving on taxes, which is dominant. But what is most important is that they get clear information and have kind of planning security.
Yeah. You know, I was just going to say, TAS did this study I think we published it in 2012, where we looked at cases that had gone through the earned income credit cases that had gone through the exam process. So these are all low income taxpayers, and they had actually appealed to the United States Tax Court. And those cases, and we looked at the cases where the IRS counsel attorneys, the attorneys had 100% conceded the liability that had been proposed by the IRS, basically the denial of the earned income credit. And we got the exam files for those cases. And we looked at, and we found that on average, the taxpayers during the exam process had called the IRS 5 times on average. And one of the taxpayers had called 15 times. And, you know, in almost every single, there's only 13% of the cases where taxpayers hadn't sent in any documentation at all. Every other taxpayer, you know, in 87% of the cases had sent in documentation. And in most of the cases, the counsel attorneys did not ask for anything else in order to decide that the taxpayer was 100% correct. So not only did they go through the whole exam process trying to make contacts with the IRS and get explanations of what was needed, but they got the wrong answer from the IRS, 100% wrong. And they had to go to tax court, you know, and go through this process. And that takes years to get a result. In tax court, even if it moves quickly. And then you think of what we didn't do in the study was be able to go back to the taxpayers and talk about their experience and get their emotions. And what I would love to see is really a study like that, you know, to do that interview work afterwards, after the exam, you know, not just a survey, but an actual sit down and let's interview you and talk about what you felt during that process and what you learned from that process. I guess, you know, maybe that's my last question to you all. And that goes to Leo's question. It was going to be what I was going to ask, you know, this is a fascinating discussion. Yay. What is the #1 recommendation from each member of the panel to improve the voluntary compliance, and not just the IRS, but maybe for state governments as well, but for tax systems overall? And I would kind of shade it a little bit differently, as, you know, the IRS is going to get this $80 billion, you know, where would you invest to improve voluntary compliance? So maybe I'll start with Stephen, go in reverse order.
Okay, so obviously my preference would be to invest in advice and helplines and things like that. But if you wanted a kind of direct return, I think that nudging would be a good area to look at. Is this beyond the pale to suggest pre-population of tax returns in the US?
I think
that impossible?
Yeah, well, we're waiting for a report that's going to come out on, theoretically May 16th about the possibility of a direct filing with the IRS that would include access to data.
Yeah.
Okay.
That'll be incredible. And then, I mean, also, if we just want to go a little bit more radical again, I mean, why do so many people have to submit tax returns in the US? Is that also beyond the pale? Looking at the UK statistics, the
Right.
three largest taxes are VAT, income tax, and national insurance contributions. And when you break down the data, you find that 52% of the tax take in the UK comes from money which is withheld at source, whether that's labor income or it's VAT. So maybe just get rid of tax returns for the majority of the population as well.
Yeah, interesting. Jim, you want to do a?
It's hard to come up with one. I will say that my own research dovetails, not surprisingly, with a good bit of Erich's, in that the suggestion I have in general for tax authorities is that they need, I've called this paradigms. There are three different paradigms for improving compliance. And one obviously is enforcement, and that's what we spent a good bit of the time talking about. But as Erich demonstrates, the enforcement, the effects of audits are far more complicated than appear at first glance, and the audits can backfire. And so it suggests that there's another, a second paradigm that matters, and that's, I think, consistent with Stephen's work and Mandi's as well, and that's what I've referred to as a service paradigm. It's a little different than, I think, Erich's slippery slope. A service paradigm, making it easier for people to pay taxes. And then the third paradigm is, I think, entirely consistent with and is built upon Erich's slippery slope framework, and that is the trust paradigm. That both enforcement and services are more effective if people actually trust what the tax administration is doing. So with that as kind of a background for, what are the general approaches here that I would suggest. Clearly the IRS is intending to invest most of the money, most of the $80 billion in enforcement. And I think that's probably misguided. I think that's got to be part of it, because I think enforcement improves the effectiveness of services and trust. But I would focus a good bit on services, and that's, I think, consistent with what Stephen is saying. And in fact, Nina and I were at a conference in Australia last month, and one of the commissioners, second commissioner, said that presented evidence that the Australian Taxation Authority, the ATO, was the most, I think this is right, most trusted agency in government. And I asked him afterwards, what is it that you've done that's improved trust? And he said things that I think relate to better services. He said, first of all, we made it really, really easy for people to pay taxes. And he brought up his phone and he showed the My Tax app that is everybody uses, that anybody outside of Australia can download and look at. And so most all people in Australia punch in some numbers and their taxes are done. He secondly said, and this is consistent, I think, with Nina and Mandi's work, is that we make it easy for people who have not paid their tax liabilities to re-enter the system. And then finally, he said we treat people fairly, which is consistent with the trust paradigm. So, I go back to a point that I made earlier, and now I'm going too long, is you need all these. Taxpayers are very different. You need a multi-pronged approach. But if I were going to focus on one single idea, Leo, I would focus on improving services, I think, right now. And technology is going to help there.
Yep. Okay, Mandi, you want to go?
I agree with you, Jim. And it is hard to come up with one answer. There isn't one answer. I think that if I'm zooming in on what happens to the low-income taxpayer in the IRS enforcement efforts, I would say reduce the number of correspondence. Well, actually, my number one issue there would be, if IRS, we cannot prevent you from continuing with these correspondence audits, you must overhaul substantially the correspondence audits regime. And that goes not just to selection, as we'll talk later in another tax chat about the GAO's discussion, they discuss what they call counterfactual audits. These are audits that are not targeted appropriately to tax noncompliance. So weed those out, completely overhaul how you're selecting who gets audited through the correspondence exam process, and then turn it at least into a hybrid process where one person is assigned to conduct the correspondence exam. So that would be on my wish list for thinking small, and on my wish list for thinking radically, it's reconceptualize enforcement. So that reconceptualize enforcement so that the IRS can spend some of those enforcement dollars on taxpayer services, on increasing education, on increasing outreach and touches to taxpayers before there's a compliance issue. So those are my 2 wish list items.
Eric, you get the last word.
Yeah, and it might not be surprising what I would propose if I had only one proposal to make. It's trust. Trust and differentiation, because it's quite abstract, I'm aware, but it allows so many deriving so many concrete strategies, and there can be lists of strategies which can be applied, let alone the echo effect with the young entrepreneurs. And I wanted to quote one last study, CICAS 2017, ran a study in 25 European countries and found that a 1-point increase in trust on a 10-point scale increases compliance by 4.2%.
It's just remarkable. Well, we have had a great discussion, lots to think about. I'll close by just reminding everybody that we're going to be back on May 30th and June 1st. It will be Artificial Intelligence and Data Week. We have 2 tax chats that week with lots of really interesting people. And in the meantime, we'll be going to Chile to have the 8th International Conference on Taxpayer Rights. And if you haven't signed up to see it virtually, you can do so. It'll be in Eastern Daylight Time. We're all on the same time zone with Chile on the East Coast. And you're welcome to sign up at taxpayer-rights.org. And otherwise, thank you all to our wonderful guests today. This was fabulous. We'll be posting material and on the website so you can see some of the slides and some of the work that people have been doing. And we'll see you in a little bit. So thank you all. Bye.